This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind. Hi, this is Joe. Today I am going to talk about swing trading. I've been getting more and more questions related to swing trading, its techniques, and where to do it, how to do it. And so I just want to take a few minutes, go through what I would consider to be my strategy if I wanted to swing trade. As I'll show you, swing trading is a lot of work. I mean, you're getting in and out on a regular basis, and you have to be prepared to do that. If you're going to trade short term, it's almost like trading for income when you're swing trading. You want to think about it that way, as opposed to trend trading, where I talk a lot about doing weekly and daily swing trade, not swing trades, but trades off of those two time frames as a combo. And then I also talk about the monthly and weekly combo. And in those two situations, we're trend trading. We're trying to take advantage of what we're seeing and getting a good entry. And as it kicks into gear, we take a little bit of a profit, and then we try and milk the trend for as long as it wants to go. When you swing trade, you don't trade that way. You're not milking the trend. You are just taking advantage of good timing, excellent execution skills. And when a stock moves in your favor after just a couple of days, it could be just a few days, you're booking profits. So let's go ahead and get into this. I want to show you, I think, some things you want to think about if you're going to be a swing trader. So first off, I want to quote Linda Raschke. She has done some tremendous work. She ran a hedge fund for years. She was one of the top hedge fund managers for a long time. And she did it in a lot of different ways. She had a lot of different things she did. But one of the things she worked on or incorporated into her process was swing trading. And so she talks a little bit about swing trading here and talks about the fact that you're really just trying to play one leg at a time when you swing trade. You're trying to get in at the right time, and then when the market makes a move in your favor, you get out. So that's one thing we want to evaluate or look at and understand about swing trading. The second thing is you always place a stop, and I'm going to show you kind of how I would go about doing that. And then next, really swing trading sounds so glamorous. In a lot of ways, it's the same as like intraday trading. Guys say they want to trade for an hour or two in the morning, and it just sounds so fabulous. I'm going to get in, get out, and make my money, and then I'm going to go play golf. And in a lot of ways, I think the allure of the sound of swing trading, it has that same type of allure to it, where I can place a trade in, I can put in my targets and all that, and I'm going to make money, and it's going to be really consistent. And the fact of the matter is, as Linda says here, it's a lot harder to do in practice than it is in theory. And you can go back and look at prior patterns and say, oh, this would have been a winner. But when you're trading in real time, watching things move while the market's open and there's so much volatility and there's gaps and everything, it's a little less realistic just looking at the chart in hindsight. One thing I'll say is that swing trading should provide you with more wins than losses. You should be able to have a decent win ratio, but you have to be willing to accept small wins. If you think you're going to get in and always go hit your target and make 2 or 3 times what you risk every single time, you're out of your mind. It's just when you have a win, I mean. There's going to be a lot of cases where it goes up for a day and then it just kind of turns. And you have to be willing to react that way if you're going to swing trade. You have to react to that type of price action and understand what's taking place. So I'm going to sort of tell you how I would go about handling a position. And then finally, what she says here is that really the pro traders, the guys who are really professionals at this, she calls them bean counters because they're just adding the crumbs. You're getting little crumbs of profit and you're adding it to your equity line. You're not getting these big loaves of bread. You're getting crumbs, and the crumbs add up after a specific month or a specific quarter, or even after the end of the year, you add all the crumbs together and your equity line has been positive and you've had a decent year. So you need to understand these type of things. What Linda is talking about here, I believe, is very, very true when it comes to swing trading. And I think if you think about it this way, it's the reason why I sort of lean a little bit more towards the trend side, following a trend. I love the weekly and daily combo because I get kind of the best of both worlds. I can make some money, in the here and now, but I don't feel like I've got to be Johnny on the spot if a stock opens up and, if I miss the open or something like that. That could be the ideal exit point. So just want to make that clear to you. So let's go ahead and look at a few trading examples. And actually, the first thing I want to do is I wrote this what, where, when. And this is what I want you to think about when you are swing trading. I want you to say to yourself, what are the characteristics I'm looking for when I look to buy a stock or short one? In this case, I'm looking at Las Vegas Sands, and recently it showed up on the short side, in my view, as a nice swing trade to the downside. And what I'm looking for personally is when the 18 and 40 are declining, in this case, at about the same rate. I've got a declining 18 and a declining 40, and the 18 isn't dropping down at a much more quick rate than the 40. They're about parallel. And the other thing that's important is I'm making sure I don't want to see price make a big drop away from the 18. If we see a move where on this drop, it drops away and the 18's like this, and we have this big separation, this is not an ideal swing trading play anymore. What we want is something a little bit more orderly, like what happened here. So we drop down, we make a new low in price. One thing I would tell you, if I'm a swing trader, I'm a lot more focused on DI than I am ADX. As long as the DI is doing what I want it to do, which is making, a confirming move, in this case, red DI making a confirming move in the direction of the trade, then I'm willing to play the rally, counter trend rally here. And so the way I would look at this is what stocks do I want to trade? I want to trade stocks that have a strong enough trend characteristics based on MACD and at least DI. And I want to have stocks that have a parallel condition in place on the 18 and 40. At least both lines are sloping in the favor of the trade in either direction. Where the trade should be, the location of the trade should be at or near the 18. So if it's a rising 18, I want to do it. So if I have a rising 18, I want to do it at or near that 18 MA. If it's declining, I want to do it at or near that declining 18. Now, it might overrun a little bit sometimes, and it might not make it all the way. And that's why I say at or near is what you're looking for. Now, that's the when. That's the where. The when is going down a smaller time frame. Now, I want to give a couple other examples. So I've talked a lot about how I would enter a trade using an hourly. If I have a daily here, I'm going down to the hourly, and I'm going to try and get my entry off of that and maybe help with the entry from that standpoint. And then what I want to do once I enter, so the entry is going to come somewhere in here, I would say probably on this big day coming down. Again, I'm not going to go through the lower time frame, but hopefully if you go through some old videos, you will see exactly how I would enter the trade using the lower time frame. Okay. What I'm going to do at that point is I'm going to put a stop here. Now, there are times where if I go down to the hourly, I can put a stop. I've got a lower high on the hourly, and I might want to use that lower high on the hourly. But in most cases, I want to go to the rally high and put it up above this peak in the rally. Okay, and then
what I'm looking for, and I don't know that you necessarily have to use the hourly from this point on. You can if you want, because you can look for signs of momentum divergence on the way down. But I'm looking for a couple, really 3 to 5 days in my favor. And if I have 2 big days like this, see this? Big day down, another big day down. I'm getting a little antsy by the end of this day. And certainly with the gap down on day 3, I'm out. I'm covering the entire position in $50. Big round number, 3 days down, gap down after 2 pretty big bars in my favor. Okay, that's it. That's the trade. Now, if you look at it relative to how much I risk versus how much I made, and you start thinking in those terms, you're gonna get caught in a much more difficult environment. You have to play short-term trades based on what the market is offering you, and not for what you want. It's not going to always give you what you want. Sometimes it will, but in most cases, you have to accept smaller wins and take a higher win rate. That's what you're trying to accomplish with these. Let me go let's go and look at another example. So I want to show you, I'm going to go back to, let's go all the way back to the beginning of 2020. And I want you to understand why I think swing trading is so difficult. Because if you look at this chart, can you tell me how many swing trades there were over the course of, I don't know what, a year and a half, almost 2 years, not quite 2 years, but this is a long time if you're watching a stock. How many swing trades, quality swing trades, do you think there have been? I would tell you that I think this was a pretty good setup right there. And this would have been, but it never really pulled back close enough to the 18. Maybe here, but it had a gap up. That would have been a hard entry point, a trigger. And then here, those are the only 2, this one and this one, that I see on this chart that kind of meets the qualities that I'm looking for. So I'm sitting there watching a stock, hoping to trade it on every single day. And yet, over the course of a year and a half, I get 2 opportunities. And then you have to be ready to pounce on those trades when they come. So let's just zero in on this and look at this trade. Because what I want you to do is, we see this pullback developing, and then we're waiting for the lower time frame to trigger us in. It's most likely going to trigger us in on this bar to the upside. Okay, and then what you're trying to do is look to see if you get some immediate follow through to the upside, or a big bar to the upside. And so we had a nice green bar here, and then a pause bar, and then we had a nice green bar, and then we had the gap up. Somewhere in this bar here, you're a seller and you're selling the whole position. You are not milking this for a trend trade to the upside. You're taking advantage of a short-term burst in your favor after buying at the right time. I can tell you this, if you want to be a good swing trader, you got to be very, very good at entry. Entry is like 80% of the battle when it comes to swing trading. If you have that, your odds of success, I think, go way up. But it's a lot of work. You can't just leave them alone. I mean, you can use the prior bar's low as a trailing stop. I kind of like to use a 2-bar low. So if I buy here, I'm going to look at the low of this bar and the low of this bar and go below the 2-bar low. Okay, and then this bar comes along and completes. Now I'm going to look at the low of this bar and go below that bar. Right? And then I'm going to keep doing that until I get a burst in my favor. I'm not going to trail the stop until I get stopped out. I am going to take advantage of a short burst of expansion bar or a gap and sell the trade. That is how you swing trade. Okay. I want you to keep that in mind. But most important thing I want you to understand is, if we're looking at what, it doesn't happen all that often. Now, it will in certain cases. Let's take a look at one more. So what, in this case, we've got a nice setup, a pretty good trending condition, and look at the 18 and the 40 rising at about parallel rate. We had nice pullbacks to the 18. Now, these aren't 100% wins, or if they're going to be wins, they might be small. You might end up having some break-even trades or something like that. But you've got to understand that this type of approach, if you're being really picky, now look at this. Look at these legs. Nice pullback here. Nice pullback here. This pullback ended up overrunning, and that was, again, that ended up after 2 nice setups. So after the first 2, you got to be a little bit more leery. But these are the types of things you want to be thinking about. So the what is buying, looking for stocks that have a parallel look to their 18 and their 40 with pretty good momentum characteristics based on MACD and DI. And then I'm looking where to do it is at or near the 18, the rising 18. And then when is going down to the lower time frame and taking the trigger off the opposing trend in most cases. So this is what we're trying to do when we swing trade. We don't milk the trade. We don't milk the trend. We take advantage of 2 to 5 bar bursts in our favor and just get out. So I hope this makes sense, but go ahead and make any comments or post any questions, and we'll see you next time.